Hello and welcome to FN Simple Trading, another video, brand new series. Guys, we're bringing you exactly what you guys were asking for, and that is our strategy. This video series is going to show you exactly what our trading strategy or methodology looks like, and we're going to be breaking down a couple trades for you, so y'all can catch a little bit more on the details rather than just how would I say, examples throughout the live stream. All right, guys, first things first, we look at three charts, three different time frames. We look at how they relate to each other. The three charts are named anchor chart, signal chart, and an entry chart. What I'm showing you guys right here is just one of the charts. So just for the purposes of this video, I'm only going to be showing one, but you guys will be seeing the most important information just on this one chart, and I'll be highlighting as we go along. The main purpose of this video is to show where your stops and your targets are on a typical trade, and we have a couple examples lined up for you. In this particular example, you can see the stop is 7 ticks, and that stop is particularly driven from an entry chart or trigger chart. Those two terms can be used synonymously, and as you guys can see, it allows us to get in with as little risk as possible. The blue box that you guys see on the chart is an area of pressure created by all three time frames together, and the dark blue line where it says the support resistance, that line must be touched by the price in order for an entry to be validated. Once the dark blue line is pierced by the price, it's touched or pierced through, you may look for an entry on the smaller chart. Our targets are driven from our anchor chart, and our stop or our risk is driven from the entry chart. We're going to switch charts into NASDAQ futures. Our previous one was Russell, if I haven't mentioned it already. Right here, I wanted to touch upon the targets. Our stop or our risk here is 2.25 points or $45, and our first target is 3.75 of a point, so $75. And as you guys can see, that is more than 1-to-1 for the first target. And if we were to just trade our first target, we would call this trade a scalp. Our second target is worth 6.75 of a point or $135. Coincidentally, right here it is 3-to-1 reward to risk ratio. However, you will know where these targets are going to be placed before you enter the trade based on the price structure. On the very bottom of the chart, you guys can see target 3, which is mostly used if you're using multiple contracts and are going to be spreading your position through the target 1, target 2, target 3. So for those who prefer to let the winners run longer, that would be the ultimate target in this position. However, for those of you who prefer day trading and getting in and out fairly quickly, target 1 would be of the scalping variety, and target 2 is what we usually prefer to take, as it gives us a nice 79% probability of success. Right here we have a 6A chart, that is Aussie Dollar futures. It's very similar to spot Forex, but the price just a little bit different if you compare it at the same time. This is a 4-hour chart or 240 minutes that you guys are seeing here. This is a beautiful example of a swing trade. Right here we're going to use target 1 as more than 2-to-1. It's almost 3-to-1 reward to risk. We're not going to be taking a scalping target. There's no point. As you guys can see, target 2 is way up there at 134 pips. And for those of you who would like to scale this position out, if you wanted to have more than just 2 targets, I would recommend trailing after target 2 And as you guys can see, your stop on this trade was only 23 pips. Your target 1 was 66 pips. And as I already mentioned, your target 2 was at 134. And you guys could trail stop the rest however long you want this trade to be open for. And right here we have crude oil, a lot of people's favorite. Many brand new traders stumble upon crude oil trading as their introductory to futures trading. Right here, as you guys can see, same concepts that we just reviewed. 6-tick stop, very little comparatively speaking. You have a 15-tick target 1, 25-tick target 2, and you have 38 ticks for ultimate target 3, which you guys can see wasn't realized until a major retracement happened over here, and then later on after a few hours it went down to meet that target. The main thing to remember with our whole strategy and methodology is that we are flexible on the time frames that we use, but we remain disciplined with where our targets are, where our entry is, and mainly where our stop is going to be. And the biggest thing is to know all this before you enter a trade. So there you have it, guys. This is our strategy for day trading and swing trading the markets. It was a pleasure. This is a first video of our more in-depth educational series. We also have a live trading room at 9:30 during the weekdays. Make sure you check that out. Check out our other videos. Give us a thumbs up on this one and others. Subscribe if you haven't already. And remember, guys, we are F and Simple Trading, so keep it simple, and we'll see you with another one.